Hey, we're peacing out here. Nope, we're talking about part two. Welcome to our discussion of Financial Checkup, part two. I'm Dee Dee Jones with Innovative Financial, and we are talking about all the different parts of your financial world that deserve a revisit from time to time, like an annual checkup, just like you would do for your body. In part one, we talked about assets and liabilities and cash flow. And today we're going to cover things around insurance, long-term planning, tax planning, of course, as well as a few oddball items that defy categorization. So without further ado, let's jump right in on insurance planning issues. So as you're sitting down and doing your review of what's happening in your financial world, these are things for you to think about. Do you need to review your healthcare options during the year for an open enrollment period? For instance, if you're under Medicare Part D and Medicare Advantage, open enrollment for that is in October. However, if you're getting insurance on the marketplace, open enrollment begins in November, so different deadlines. And if you get your health insurance through an employer, that varies by employer. It could have been in the spring. Generally, they're in the fall, but not always. So it's wise to see what coverage you have and if it's time to consider a change. Next on the list is life insurance. Do you have life insurance? Do you need life insurance? If you've got an existing policy, look at it. Does it need a more thorough review if it has a cash balance involved? I think it's always wise to get an in-force illustration and make sure that what you've purchased is still appropriate for your situation. I've got somebody who's talking with me right now who really no longer has a need for the life insurance policy that he bought a number of years ago. So we're exploring the options on what to do with that asset. Related to insurance, have there been changes in compensation, maybe a new dependent or even new liabilities? And if that's the case, you might need to change the amount of life or disability insurance coverage that you carry. Real estate. Has there been any changes to your real estate holdings that could impact your property and casualty insurance? This could be a pool, a new structure, perhaps a car, or even a second property. It's really good to review and make sure that the coverage is appropriate to the assets that you have. It could be you inherited gold coins from someone. That needs to be talked about with your insurance coverage person, your insurance agent. And a big one, especially in this era of COVID, have there been changes to your health situation that would warrant a review of your employee health or disability benefits? If your health has changed, you may want to choose a different health plan. You may be familiar with the bronze, silver, gold scheduling of health coverages. Really healthy people, pretty good with the bronze or maybe the silver, but people with more chronic conditions find it's in their financial best interest to consider the gold level coverages. There's even platinum beyond that. So those are the insurance issues that deserve a look. As you go through this checklist, you may discover one question leads you to many, many more questions. That's the whole idea, is to make sure that you're taking a thorough look at what's happening in your world. Now we're going to talk about tax issues. And always when we talk about tax issues, what is absolutely in force right this minute can change. So we're late summer 2020, depending on when you watch this, things could be very, very different. So keep that in mind as we go through. Now, some of these are going to be same year to year. For instance, were there any surprises on your tax return the last time you prepared it? Hopefully not. But if there were, have you made adjustments, and are you planning to incorporate those changes in this year and into future years? Last time you filed a tax return, did you receive a large tax refund, or did you need to pay an amount when you were filing your return? If so, consider changing your withholding or maybe even making estimated tax payments, because neither of those events are good. Our goal is to get a refund or an amount due, give or take $1,000, which sounds like a huge window, but in most situations, we're really happy if we can get plus or minus $1,000. So, looking forward, will you be receiving any significant windfalls that could impact your taxes? An inheritance, RSUs, stock options, bonuses, selling out of a company. All of those situations have the potential to change your tax liability. look and see what's happening, what will be coming to you, what the tax events around those will be, and make a plan for it. Do you expect your income to change in the near future? And if so, there may be strategies to manage down your tax liability. And always be sure you understand what unrealized gains, losses, and carry forwards that you have both on your tax return and built into your taxable investment accounts. Those create planning opportunities going forward. You might be in a situation where you're looking to make non-charitable gifts. So that's gifts to anybody besides a 501c3. A 501c3 is, the pet shelter or Salvation Army. A non-charitable gift, which for tax terms, that makes sense, but it sounds like you're not being charitable. But a non-charitable gift is maybe you're gifting money to grandkids or a neighbor or really anybody else that doesn't fall under the 501c3. Non-charitable gifts have limitations before either taxes and or reporting are required. The limits at this point in time are $15,000 per person doing the giving per recipient. So you've got a married couple, they have 2 grandkids. Husband can give $15,000 to each, so there's 30. The wife can give $15,000 each, so there's 30. So they can actually move $60,000 each year out of their estate if that's an appropriate planning strategy. When you exceed those limits, there's some reporting and it will consume some of your lifetime gifting exemptions. Do you have any charitable gifts that you're planning on making this year? And with the new higher standard deductions, we find that bunching can help people get a little more tax bang for their buck. What do I mean by bunching? If you're going to make a $5,000 contribution every year, if you do that, you're probably not going to hit the threshold for itemizing your deductions. But if you make $10,000 every other year, that might kick you over that standard deduction and allow you to get some tax benefit from that. Now, from a tax planning standpoint, that's really great. From the charity standpoint, that could be a real drag. So be sure and work with your charities because they're really important, especially right now. Let them know what you're trying to do, and they may have ways for you to do it. Using a donor advised fund can help you do that as well. That's a different chat. We'll have another video on that another time, but donor advised funds can help you there. Now, a good thing to know is make sure you understand what your cost basis is on all of your taxable assets. What do I mean by that? What did you pay for something? So a few years back, there was a law passed and all the brokerage houses track cost basis going forward. So this research actually applies to things you've owned for a longer period of time. Say you inherited some stocks from grandma back in 1980. The brokerage house isn't going to have tracked that for you. You'll need to do some research and find out on her date of death what the value of those stocks were, because that's going to be your inherited basis. Investment properties, also we need to know basis on those. That's what you paid for them, plus any improvements that you've made over the years. But knowing that number can be very helpful as you consider making sales into the future. And finally, one thing on charitable deductions. For 2020 and 2020 alone, the CARES Act allows for a $300 above the line charitable deduction that I should have mentioned a moment ago. So just for this year, if you can't itemize your deductions, you can still deduct $300 above the line under the new CARES Act. So that's the tax planning things that are run-of-the-mill and important to consider. If you've got a more complex tax situation, absolutely get with your tax advisor, because if it's more complex than this, you're probably already working with one. All right, so let's shift gears. Long-term planning issues. Think big here. Have any of your financial or life goals changed? And that could depend on any number of things. Maybe you've gotten married, maybe you've gotten divorced, added a new family member, a new baby. That can really change what your goals look like. And that's going to trickle down into almost everything about your plan. Here's one. We should all be so lucky. Do you expect your estate will exceed $11,580,000 if you're single, or $23,160,000 if you're married? Those are the estate tax thresholds as we speak. Monies beyond that inside a taxable estate are taxable. And there's ways to manage that through gifting, some trust possibilities. But if you're much, or even funding the taxes through insurance. So if you're above those estate levels, really important to work with your tax preparer or a better financial planner to make sure you understand what the implications of the large estate are and look at different ways that you can manage the tax burden. Around long-term and maybe estate planning related topics are beneficiaries. It's always good to review the beneficiaries that you have on your IRA accounts. Maybe you have some transfer on death accounts. Make sure that's still going to the people you want to. In many states, you have the option on your home to create a transfer on death deed, which is really great, makes things simple, upon your passing. But definitely go through and review those, make sure it's still who you want it to be. Could be you got divorced, be sure and change those things. Could be there's new people in your world, definitely time to change. And it all ties into, have there been changes to your family? Marriage, divorce, birth, death, illness really should trigger an entire review of your estate plan, which again is a topic for another day, but important to make sure that as your family construct changes, that your will and your final wishes reflect those changes. Have you purchased property outside of your state? So if you live in Colorado, but you have a vacation home in Idaho, you might want to look into a revocable living trust to make your estate easier to settle upon your death. If you don't do that, you will end up with probate. Well, you won't, your heirs will. Probate in Colorado, and another one in that other state, in this example, Idaho, which is complicated, expensive, and kind of a pain in the butt. We don't want to leave a mess after we're no longer on this planet. That's one of my goals, actually. So kind of some other issues. My checklist says, do you need to take steps to protect yourself from identity theft? And I'm here to say you do need to take steps. We always do. And each year as you come through this list, there'll be other ways that you can take steps to prevent identity theft. We have a separate video on that. I'll put a link below so you can watch that. Next one is around organization. If you did the Marie Kondo thing during the COVID quarantine, you might be totally ready for this, but it's real important that you have your financial documents organized, stored properly, and make sure that the right people know where the documents are. So if you're single, make sure that someone who you know and trust and is going to be perhaps helping you out if you're infirm or helping things out if you die, make sure they know where those documents are. If they're in a safe, make sure that they have a key. If they're in a safety deposit box, make sure they're registered on it and have their own key. And other things, different states have different rules around all sorts of things. If you're buying an electric car, different states have different tax issues. If you're possibly inheriting or you live in a state that has an inheritance tax, not an estate tax, be sure and see how that affects your situation, but maybe learn a little bit more about specific issues specific to where you live, what state you're in, because states do have different rules. So that's part 2 of our annual financial check-in checklist. As always, we've got them available to you. If you'd like a copy, reach out. We'll send that out to you. If you've got more questions on this or any financially related topics, we're here to help. Again, this is Dee Dee Jones with Innovative Financial. Thank you for joining us today.